Now, the $1,000,000 question in the minds of crypto investors is, will this current bear market be a short one, like a few months, or a longer one like 1 to 2 years? We've been debating this very question in my crypto groups, and everyone's pretty split, right? I've been contemplating this question and it came to me all of a sudden. And I think the key to answering this question lies outside the Bitcoin and crypto world and is actually related to the broader financial markets like stocks, equities, and so forth. So in this video, we'll dive into my analysis and discuss some possible scenarios for Bitcoin and crypto moving forward that depend on the broader financial markets. If that sounds interesting and useful to you, then strap in, my friend, and let's dive right in. Now, the stock market and crypto markets have always had an interesting relationship. Crypto's only been around for a few years, right? With Bitcoin, the oldest one, existing for 12 years so far. One critical point that I don't think people talk about enough is that crypto has only been around during a historical 12-year bull run. What if all of that changes though? That's a huge unknown that we're gonna touch on in a bit. But so far, it hasn't changed, right? Stocks are still on an undeniable bull run, and everything's at all-time highs right now, like stocks, even your meme stocks, real estate, commodities, and so forth. That's why I wanted to point out this divergence, right? Crypto went through a large correction recently, while everything else stayed high. So here's what I'm thinking. Even though crypto and the broader financial markets may not be too correlated on a day-to-day basis, I think what comes next for Bitcoin and crypto will be intimately tied to the performance of the broader financial markets. Let's take a closer look at what I mean by this. First, don't trust, verify, right? Let's go to the charts just to make sure that what I'm saying is accurate.
All right, so I'm in TradingView right now, and this is the S&P Goldman Sachs Commodities Index. And look, it's near all-time highs right now, all the way up here. If you zoom out, you'll see how high it is still. And then here is the Vanguard Real Estate ETF. This is zoomed out, still near all-time highs up here. This is SPY, or the index fund tracking S&P 500, way at all-time highs. Dang, look at this. For real, all-time high. Even meme stocks, like I said, right? AMC is still super high right now, and GameStop still super high right now. Like, it had a huge correction but came back up, right? Freaking crazy. All of those different markets, types of asset classes and whatnot are still at a tear with no real correction, right? And contrast that with this crypto total market cap. We really rocketed, but at the highest point, the market cap to the lowest point of the recent crash, it was like more than 50% wiped out, right? This stands in stark contrast with the other charts that we saw.
So what I'm wondering is this the beginning of a longer and deeper correction? Or will it be a shorter one and we'll recover much sooner? I think that depends on all the other financial markets we just took a look at, right? And there's two scenarios I want to explore. First is that the other markets just stay bullish with no real significant correction, and if anything, just some sideways action near its highs. The second case is a big correction comes as this bull market finally ends, because the Federal Reserve's hands will be forced. In the first bullish case, this could happen if the bulls are right? That there's way less risk right now because there's no trade war looming, COVID's ending, the election uncertainty that we had is not there anymore, that businesses are recovering and economic growth is speeding up, that even if Biden raises taxes, the continued government spending and low interest rates, things like that will keep the markets frothy. If these bulls are right, I think that our crypto bear market will be much shorter. The longer other markets stay high, the more risk on other investors will be, and some of that money will start to flow back into the crypto markets again. Now for our second case, the bearish one, some well-known macro analysts that I follow have been calling for the end of this historical bull market to happen this year. You can go listen to some of them like David Hunter, Jeremy Grantham, Harry Dent, Michael Burry, and so forth, right? Just go search them on YouTube and watch some of their analysis. They're calling for significant bear markets to start this year, and of course they each make their own case, but some high-level reasoning includes the Fed being forced to tighten, which is the opposite of QE or quantitative easing, They may raise interest rates early if inflation gets out of hand and the economy overheats too much. All of these actions could spook the market and cause a fast and deep crash, especially with all the leverage in the system, right? Just like we saw with Bill Huang and Archegos Capital getting $30 billion liquidated. And that could very well be an early canary in the coal mine. If this scenario happens, I think Bitcoin and crypto will not be spared, and that we'll get a ton of pain in our markets too, as investors flee to safety like the USD or treasury notes. And all of that will cause us to have a much longer bear market that continues on from our current one. So that's it, right? If stocks start to fall too, then we should just sell all our crypto and wait out the long bear market. Well, no, because there's a twist here. Some of these bearish macro analysts also forecast a commodities supercycle to start soon, right after the large correction. This means that gold, silver, things like that will rocket way past all-time highs, and their line of thought goes as follows, right? We'll see a global bust, and then governments are going to print money like crazy to try to get out of it. Some macroeconomic terms will have deflation, which leads to disinflation, and then that will lead to double-digit interest rates. During this scenario, the best assets to own will be something like gold and other commodities, especially as multi-trillion-dollar infrastructure programs are likely to be implemented by China with their Belt and Road program and the Biden administration. I predict that if this happens, Bitcoin will also rocket alongside gold. Since already during this cycle, we see more and more institutions consider Bitcoin as part of their portfolio instead of gold. And we already know the younger generation prefers Bitcoin to gold. So if this scenario plays out, we don't want to sell all our Bitcoin while expecting a long bear market, because it could enter a true super cycle at that point. Okay, so this is cool, but what actions can we take, right? How do we play these scenarios as crypto investors? That's the million-dollar question for us. Well, I'm no financial advisor, but here's how I'm personally thinking about it. Of course, we always dollar cost average Bitcoin on this channel. This is the best approach because it works regardless of what happens to price. But you can also get a little fancy and tweak our dollar cost averaging amount, like decrease it a little when it's a bit high and raise it more when we drop to a lower level. Also, don't get too overweight with your portfolio, right? It's that saying, don't invest more than you can afford to lose. If things do drop heavy and you're forced to sell to pay off other debts or your bills, then you have way too much invested right now. Make sure that you have the cash flow necessary to pay off your debts so you're not forced to sell BTC when you don't want to. Also, if a big crash does come, we would preferably have some dry powder available, right? This is cash on the sideline that could come from your salary, or if you've already trimmed some of your positions as you took profits. Something else I like to do with part of my holdings is momentum trade, right? And this works well in both scenarios because I can ride with the bulls if the bull market returns soon, or if the bear stays, I'm protected since it has me in cash or stablecoins when nothing is trending up momentum-wise. Now I have to stop you here and note that I'm painting with broad strokes here when I share with you the possible scenarios. Those macro analysts and I could be totally wrong. After all, I did say before that the Pi cycle top indicator was a fairy tale and it would not mark yet another peak for Bitcoin's price. Turns out I was wrong and it worked yet again, but I still think it's a fairy tale and just a coincidence. I'm stubborn that way. By the way, a couple weeks ago, I made 2 videos about why the bull market is still here and why we might be in a bear market actually. You can catch both of them right here, and many of the points I made back then are still relevant. You should watch them and comment below with which side is more compelling to you. I'm Kevin from BFB. I can't wait to see you on the next one. Cheers.